Welcome to this deep dive. Today we're getting into something, well, really foundational. Building good credit habits early on.
hmm
It might not feel urgent when you're just starting out, but we're going to explore why it's so crucial,
Absolutely.
especially for those big life moments, like buying a house or maybe a car.
Yeah, the big ticket item.
Exactly. You can almost think of good credit as like a financial passport.
Yeah.
It opens doors and, really importantly, it saves you money.
That's a great analogy, actually.
So for anyone new to this, or maybe looking to improve their credit game, where do you even begin? It can feel a bit overwhelming.
Yeah, that's the key question, isn't it? There are a couple of really solid starting points, especially if you've got basically zero credit history.
Right.
One is a secured credit card. The other is becoming an authorized user on, say, a family member's card, assuming they manage it responsibly, of course.
Right, got to trust them.
Definitely. So with a secured card, you put down a security deposit, maybe a few $100s, and that usually becomes your credit limit. It acts as collateral for the bank.
So you're kind of backing yourself.
Exactly. It feels a bit different, but it's a way to demonstrate to lenders, look, I can handle credit, I can make payments. It starts building that essential payment history.
Okay, that makes sense. And the authorized user route.
Well, if someone with good credit adds you to their card, their positive payment history can sort of reflect onto your credit report. It's a way to piggyback, essentially.
Gotcha. So those are ways to get your foot in the door. Now, let's say you've done that. What are the absolute, non-negotiable habits you need to lock down?
Oh, number one, without a doubt, pay your bills on time.
Yeah.
Every single
No
time.
exceptions.
No exceptions. Your payment history is the single biggest chunk of your credit score. It tells lenders basically everything about your reliability. Even just one late payment can ding your score and send up a red flag.
So things like setting up automatic payments could be a lifesaver then.
Absolutely. It's simple, but probably one of the most effective tools. Takes the oops, I forgot factor out of the equation.
Yeah, remove that mental burden.
Yeah.
Okay, so on-time payments, crucial. We also hear the term credit utilization thrown around a lot. Can you break that down? What does it actually mean for someone starting out?
Right, credit utilization. Okay, imagine your total available credit across all your cards is like a pie.
Okay.
Utilization is just the slice of that pie you're currently using. So if you have a $1,000 limit and a $200 balance, your utilization is 20%.
Simple enough.
Yeah. And the general advice is to keep that percentage below 30%. Ideally, honestly, even lower, like under 10% is fantastic.
Below 30, ideally under 10. Why is that number so important to lenders?
Well, a low utilization rate suggests you're not maxing out your credit. It signals that you manage your finances responsibly and aren't overly reliant on borrowed money.
So it shows control.
Exactly. And here's a little nuance that sometimes trips people up.
Yeah.
Even if you pay your balance in full every month, which is great,
Uh-huh.
if your balance is reported to the credit bureaus when it's high, like right before you pay it off near the due date, your reported utilization could still look high for that snapshot in time.
Oh, interesting. So it's not just about paying it off, but keeping the running balance relatively low throughout the month.
Precisely. It's about managing the balance before the statement closing date, usually.
Good tip. Okay, so we're paying on time, keeping utilization low. What about, understanding the actual agreement, the fine print?
Yes, absolutely critical. You have to know the interest rate, the APR. If you carry a balance month to month, that interest is how credit card debt can spiral. It adds up fast.
Right.
Also, be aware of any annual fees, late payment fees, over-limit fees. Basically, know the rules of the game you're playing.
It's not just free money.
Definitely not. It's a tool. And a really important point here is avoiding the temptation to max out your funds. Just because you have a $5,000 limit doesn't mean you should spend $5,000, especially without a clear plan to pay it back quickly.
That sounds like a recipe for trouble.
It really can be. Treating limits like an extension of your income is a dangerous path.
Okay, so this foundation on time payments, low utilization, understanding the terms, how does this connect back to those big goals? Buying a car, buying a house. Why is starting early so important?
This is where all that groundwork really pays off, big time. When you go for a major loan, like a car loan or especially a mortgage, lenders dig deep into your credit report and score.
They scrutinize everything.
Pretty much. Your credit history is one of their main tools to gauge risk. How likely are you to pay back this large sum of money? A good score dramatically increases your odds of just getting approved in the first place.
Okay, approval is step one, but there's more.
Oh, yeah. Arguably, the even bigger impact is on the interest rate you're offered.
Ah, the cost of borrowing the
Yeah.
money.
Exactly. And we're not talking small change here. Even a seemingly small difference in interest rates can have a massive impact over the life of a long loan.
How massive are we talking?
Well, let's take a mortgage, say $300,000 over 30 years. A difference of just 1 percentage point, say, getting 6% instead of 7%, could literally save you tens of thousands of dollars in interest payments over those 30 years.
Wow, tens of thousands, just from having better credit habits earlier on.
Precisely. It's a direct financial reward for demonstrating responsibility. Good credit makes borrowing cheaper. Simple as that.
That really puts it into perspective. It's not just about getting the yes for the loan, it's about potentially saving a fortune. And I've heard credit can affect other things too, not just loans.
That's right. It's becoming more interconnected. In some areas, your credit history can influence your insurance premiums, car insurance, sometimes homeowners.
Really? Why insurance?
Well, insurers sometimes use what's called a credit-based insurance score. Studies have apparently shown some correlation between how people manage finances and their likelihood of filing claims. It's a bit controversial, but it happens.
Interesting.
And also, think about renting an apartment. In competitive markets, landlords often pull credit reports as part of screening tenants. They want to see that history of paying obligations on time.
So it really does touch many parts of your financial life. Okay, so for listeners trying to build or maybe fix their credit, what are some common mistakes or pitfalls to actively avoid?
Good question. One common one is opening too many new credit accounts too quickly. People think, oh, more available credit, that's good.
Right. Boost the utilization ratio denominator.
Yeah, but opening lots of accounts in a short time can actually look risky to lenders. It might signal financial distress or potential overspending down the line. It causes multiple hard inquiries, too.
Okay, so pace yourself. What else?
Be wary of store credit cards. You know, the ones they offer you at the checkout for a 10% discount?
Oh yeah, those are tempting.
They can be, but they often come with really high interest rates compared to regular bank cards. If you don't pay that balance off immediately, that discount disappears fast under interest charges.
Good heads up.
And maybe the biggest pitfall of all is simply spending more than you can comfortably pay back each month. Letting balances grow, only making minimum payments. That's how you end up with high interest debt that just weighs you down.
Avoid accumulating that bad debt.
Got it.
Those are really important warnings. Be strategic, be mindful. Now, if people are looking for tools or support, you mentioned Cool Credit earlier. How might that fit in?
Yeah, Cool Credit has a couple of features that could be helpful here. Their credit booster plans, for instance, are designed specifically for people maybe with thin or limited credit files. It helps demonstrate that positive financial behavior over time.
So it helps build that track record.
Exactly. And they also offer credit monitoring. This is super important for everyone, actually. It lets you keep an eye on your credit reports, see what's being reported, catch any changes quickly.
Stay informed.
Right. And if you do find an error on your report, and errors do happen, they have an AI tool that helps generate dispute letters to send to the credit bureaus. It helps you challenge inaccuracies and protect the good credit you're building.
That sounds useful for making sure the report is accurate.
Yeah.
Okay, so wrapping things up, if there's one core message to leave our listeners with today, what would it be?
I think the main takeaway is that building good credit, especially early on, it's a long game. It's a marathon, not a sprint.
Requires consistency.
Totally. It demands consistent effort developing those responsible habits we talked about. But the payoff, better financial options, huge savings on big purchases, just more flexibility, it's absolutely worth that effort.
Yeah, starting early, using credit smartly, understanding what you're signing up for, maybe using some helpful resources.
Yeah.
It really does seem like you're building a foundation.
You really are a foundation for a more secure financial future, especially when you hit those major life milestones like buying that home.
Makes those dreams more achievable and maybe more affordable too.
Exactly. Those small, steady steps you take today, they can have a really profound, lasting impact on reaching those big financial goals down the road.
That's a great thought to end on. Thank you so much. This has been incredibly insightful. I definitely learned some things.
Happy to help. My pleasure.
And thanks everyone for tuning into this deep dive. Remember, those consistent, responsible steps with credit today, they really can unlock some amazing opportunities tomorrow. Think about that, and we'll catch you next time.